Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 question number 37. This is non-profit organization related question. Look here, what are the requirements? There is a double entries required. Okay, look here. Write the journal entries to record depreciation of sports equipment. Depreciation of sports equipment. And the recognition of donation as an income for the year ending 31st March 2025. Okay, depreciation of equipment, first one, and recognition of donation as an income for the year ending 31st March 2025. Look here, what is this? Is a guideline. This is the information. Look here. The following transaction took place in the sports club during the year ending 31st March 2025. 31st March 2025. Okay, let's see. We must prepare the years. Years. Okay, our year is year ending 31st March 2025. What is the opening date? Opening date is there 1st April 2024. Sorry, April 2024. Okay, this is the year, our year. Look here, there is a transactions there. First one, received a donation. Received a donation means received the cash. Okay, donation 300,000 on 30th November 2024 to purchase sports equipment, and it was credited to sports equipment donation fund account. Look here, there is a donation receiving. We identify the date. The donation received in this area 30th 11/2024. No, this is the donation receiving. Donation received 300. What is the double entry for 300? Firstly, I prepared double entries for these accounts. Look here, there is a cash receiving. No, cash receiving, cash control debit. Cash means receive and payment account. Receiving and payment account. Payment account means cash account. No, cash account. Cash account. Cash should be receiving. No, cash debit 300. First one, cash receiving. Cash debit, credit to where there is a fund. Why? This money was received to special task. Therefore, we create a fund. Look here, this is for purchase sports equipment. Therefore, we create sports equipment donation fund account. We credit to, there is equity account 300 sports equipment donation fund account. This is equity account. Equity account, there is a short one. What is this? This is cash. This is fund account. Okay, this is the double entry. Firstly, we identified. Okay, let's see the next one. Next one is, look here, purchase the sports equipment worth 200 for cash. Paying cash and purchase the sports equipment on 1st January 2025 using this donation, the expected useful lifetime of the equipment 5 years. Look here, 1st January 2025. 1st January 2025, there is a purchasing of sports equipment 200. Okay, what's the double entry? Cash paid, no? Cash credit, debit to sports equipment 200, sports equipment, there is a cash, there is a short number 2 cash, there is sports equipment short number 2. Okay, cash debit, cash credit, sports equipment debit. Let's see. After that, we finally, after the end of the year, we can calculate the depreciation. No, look here, this the expected useful lifetime is guideline to depreciation calculation. Okay, after, look here, third one, paid advance. Look here, there is an advance of 50,000 using this donation. We use the donation 25th March 25. We paid advance which date? This time 25th. Look here, 25th March 2025. 2025. No, there is a this is related to like 31st March 2025. There's a near date. Okay, 25th March 2025, but closing date is 31st March 2025. Okay, let's see. Paid advance, no? Advance to purchase another sports equipment. There is advance payment. This sports equipment is expected to received by the sports club on 5th April 2025. Our year is ending 31st March 2025. No, 31st March 2025. But this sports equipment was received, expected after the year ending 5th April 2025. This sports equipment was received this area 5th April 2025. There is our year is ending this time. There is advance payment is this area, but there is no purchasing, actually purchasing, only advance pay. By there, this date is, this is the future date. No, the future date we must collect this equipment, but this is this time current year situation is advance payment. Okay, what is the advance payment? Double entry. Advance payment, cash credit. We cannot debit to sports equipment, therefore I can create an advance payment account. Prepaid advance account, debit 50, cash short number 3, cash credit. This is the advance account, advance short number 3. Okay, short number 3. This is the current situation. Look here, the final guideline. The policy of the sports club is to recognize the donation. There is a donation, no? There is a donation fund. Okay, recognize the donation as an income. You know, after finally we identify this fund as an income. Look here, there is a fund is there. What is the fund? Look here, sports equipment donation fund account. This is the equity account. Okay, the year by year we can identify as income, debit to fund account and credit to income account. Okay, at that time they said that recognize the donation fund as an income. You know, year by year we can convert this as an income, this donation fund account, okay, as an income to extend that it is used to make payments during the accounting year. You must identify the income extent means value limitation. It is used to payments. You know, we can use this fund donation to sports equipment purchasing. At that time they said it is used to payment. There are so many payments done payments during the current accounting year. There is a income recognition based on the income donation fund account is equal amount to it is used to payments. How many amounts used to payments? Look here, there is a payment is there, the cash account, there is a payment is 250 is used from this fund. Therefore equal amount to 250 we can identify as income from this fund. Look here, the final transaction double entry, we used to payment 250. Therefore we use this donation fund as income. Look here, the donation fund is credit diagonal. We use this. Therefore debit 250 and credit to income statement, and we can again write income and expenditure account, income and same word, income and expenditure account, account. At that point, you know what is the final result, debit to income donation fund account and credit to income statement account, meaning you prepare the income statement. No, income statement you can identify as income. This is the sports equipment donation income, which amount 250. This is debit, credit to this account. Okay, this is the identification of income. Identification of income means we eliminate the fund account and this is carried to income statement. This double entry is fund account is debit, income and expenditure account credit. Okay, let's see the question. What are the requirements? You know what are the requirements. First one is depreciation of sports equipment for the year ending 31st March 2025. Sports equipment, what is the amount sports equipment? We create account. This is sport equipment account. Only 200 was sports equipment. The advance is we cannot get sports equipment. 200 should be depreciated. How can we depreciate? Depreciation, annual depreciation. No? Annual depreciation, how can we calculate? Annual depreciation cost minus residual value divided by useful lifetime. useful lifetime. This is the annual depreciation, no? Annual, no? Look here, cost is 200, residual value is 0. What is the useful lifetime? Lifetime is the expected useful lifetime is 5 years. No, look here, we divided in 5, 200 divided in 5, 40. This is the annual depreciation, but you know this office equipment purchased on middle of the year. Look here, this purchasing done is 1st January 2025. 1st January 2025. This is sports equipment purchased on 1st January 2025. After the purchasing, how many months we can identify as a usable area? Look here, 1st of January 2025 to 31st March 2025, there is how many months? 1st January 2025, January 1st to 31st March 2025, how many months? 3 months. Therefore, we can calculate this is the annual depreciation now. Therefore, we identify the 3 months depreciation divided by 12 multiplied by 3 is 10. This is the depreciation expense. Therefore, we can write sports equipment, no? Sports equipment, what is the double entry? Double entry. Sports equipment, no? Depreciation expense debit, cumulated depreciation expense credit. 10. This is 1000. Sports equipment depreciation expense, depreciation expense debit, credit to sports equipment cumulated depreciation credit. This is double entry. What is the next one? Next one is recognition of donation as an income for the year ending 31st March. There's a recognition, we saw the finally. What is the recognition shots? This one, sports equipment donation fund account debit. Okay, debit and credit to income statement 250. Sports equipment donation fund debit. Okay, 250 and 250. Sports equipment donation fund debit, credit to income statement or income and expenditure account, income and expenditure account credit. This is the answers. After that, we find the answer of this is the partnership related question. This is the answers for question number 37. In next video we meet question number 38.